The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the 12 o'clock to 1 o'clock time frame every weekday, every market day, and this is going to be a very interesting session because we're starting to get that roll over the arch. You remember I've been talking all week, actually for 3 months I've been talking about the arching formation, the lowercase h that we always look at. Let's go through the numbers. The S&P E-mini is down 47 at 2670. It made a high at a peak D top. What is the peak D top? It means from the lowest, most obvious low bar, you merely count each successively higher peak. And when you get to the fourth highest peak, that's where you start to see other things happen. It means that it could also go, it could recycle and start a brand new buy mode. It could just go up another couple of letters. The letters go to a G, never an H. So it goes, peak A is first peak, second peak is B, third is C, fourth peak is D, 5 is E, 6 is F, and then 7 is G. And then like on the piano, where you've got your octave, you got to repeat the name. You can't go to an H. So very interesting. We went to the peak D on the high of the 29th of January at 28.83.25. Pull back very sharply to 25.32, run up to 28.07, and where? A peak D. The peak D in the weekly chart, the lowercase h that I've been talking about is the template that we're following for subscribers to my opening call. This is what we're following. You see even a peak D in the 120-minute chart at 28.07.25. Really important, and because of that, I'll talk more about during the show, but I'm giving a webinar. A webinar is called The Power of the Fourth Highest Peak in the Chapman Wave. Remember, you can go through, I've been getting Stocks and Commodities magazine for 20 years, I don't know how long. There's I've never seen an article that grades every single peak the way I did. Started doing it back in the 1970s when I hand charted back into and then going to the 1980s. So, and it was a time when people were talking about Fibonacci, so I didn't want to confuse what Proctor was talking about when he was talking about wave 1, 2, 3, etc. I said I'll go to letters. It's just easier that way. It's clear. So this is what I'm going to be giving, a webinar based on the Chapman Wave methodology, going to a D. What happens at D? What do you look for? How come we've been able to short at D and it's been pretty successful? And what do you do if it's not successful? The peak D will be discussed 6 p.m. to 7:30 p.m. on April the 3rd for Eastern Time for subscribers. But you can become a subscriber, and it's a money-back guarantee. So it's really kind of for free. You get my newsletter and the trades that we're putting on. This is such an important phase that we're going through right now. I'm also going to be talking about what happens after. Why am I concerned that the weekly charts and the monthly charts are all at D's and E's, and therefore I have to take this pullback a lot more seriously than at almost any other time, because it could start to accelerate. Let's go to the numbers right now, and I'll show you as we're talking. The Dow monthly chart is at a peak E with the Roman candle that I said at 24,000, a close below on a weekly basis below 24,200. This Chapman Wave Roman candle, these are all techniques that I developed. So these are proprietary techniques. I actually share them all the time. Most people would have just started a service and you would have had to pay for every single different thing. Even my trin gauge, you would have had to pay a la carte for it. I keep it in my newsletter. These are all very important techniques. This Chapman Wave Roman candle, we saw that back in 2007 at the monthly top, and that was an F. This is an E, but my rule of thumb is that if in this Chapman Wave Roman candle, if this wick, if there is a close in a smaller time frame, because it's monthly, I'm saying on the weekly basis, if there's a close tomorrow afternoon below, it should be between 24,300 and 24,200. I'm just making it clear, under 24,200, there's a really good chance. I mean, it goes to 85% or higher that you're going to retest at 23,360 or get real close, or usually you take it out. But that's the rule of thumb. Here's the lowercase h that I drawn in ages ago for the Dow for the weekly chart. There's the lowercase h that goes to a little mini m, which is a much larger h that you're looking at. This is serious stuff. The Dow is at 24,240, down 440. We're fortunate we were able to short the Dow off the major top at 26,600. Soon afterwards, we switched the day after the low of 23,360 on the 9th of February based on the Chapman Wave methodology. We took some profits in that. We switched back to short the day on the 12th, I believe it was, of March. The candle that made this recent top of 25,800, we actually shorted about, I think it was, no, I'm sorry. So we are short via the inverted ETF, and so that's what we're looking at. We aren't actually short the Dow, but we are short a vehicle. It was right here. I knew there was a problem. It was on the 12th. So just right off the top, we were able to do that. So that gives us a little bit of comfort, and that's what I'm saying, that it's a technique that you can use. It's no guarantee, but it's a fabulous technique in that it gives you the opportunity to, in other words, we are short just off the top, well, we are long a position, but it means that those little bumps like yesterday, the little bumps and grinds that kind of can confuse you, we're able to get away from that because we were right there at the turn. That's what's so important. Look at the S&P. The S&P right now, SPX, is down 44 points at 2667. Under the 9-period moving average, made a peak D on the 13th of March, pulling back very sharply, makes a peak D in the weekly chart at 2872s. The week of the 29th had a peak D. Take the opportunity. Let's do it together. Less than 2 weeks' time. You can start your service right now. You'll be ready. It's only open to subscribers. You have to be a subscriber. Check it out, front page of TFNN. So S&P has to hold the 2650s, 2647s. Breaks that, we're going to be going down to 2598, the 200-period moving average, but go one step at a time. I'm not in the camp that says because you call something, but you don't give it as a trade, that you can be measured. You cannot be measured by talking about it. So in other words, the short positions that I'm telling you we have, and the long position, this is what we have, subscribers have as positions. It's not verbal, it is physical. So the QQQ is trading at 163.43. We have 3 times short ETF, right off the very top, within a point at the top, at peak D. It gives a good comfort. That's really my emphasis. Technically.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the QQQ is down 276, down 1.65. There's been a little bit of a bounce here. I guess there's a little note in the den. Trump set to set stage for China tariffs and trade war fears. 47 minutes ago, they said the White House said Trump would sign a presidential memorandum targeting China's economic aggression at 12:30 p.m. Eastern Daylight Time on Thursday, March 22nd. U.S. President Donald Trump was expected to lay the foundation for tariffs on Chinese imports worth around $50 billion on Thursday. Yeah. So it's never good to have trade wars, except that I discussed this years ago. I'm not going to take the time. Maybe tomorrow in Technical Friday I'll do it, about a friend of mine who had imported, what was it? Material to Russia. And with all the vodka and everything he had to drink, he finally was really successful. And he thought, hey, this is really good. I'm going to do this with China. I'll tell you, someone remind me about that story tomorrow. Funny story, true story, funny story. Well, it wasn't so funny for him, but it was a funny story nevertheless. So QQQ is down 275. I want to go to the IWM. IWM right now down 166 at 155.47 under the 9-period exponential moving average. The chart pattern actually is a little better than the others, but I've got to watch the IWM, the Russell 2000, really closely. Monthly chart's still pretty darn good. Weekly chart actually is also still pretty good. So Russell holding a little better, in my opinion, just technically. That's all. Doesn't mean to say it's not going to go down further. Now, this is going to be very important. Gold. Gold now is up $5, way off the high, way off yesterday's high. It had a spectacular run yesterday. My thinking was that in this particular period, some things have to move up. And for subscribers, I said, maybe we've got a little bit of a trade here in gold. I don't see any big deal. It was a news event, an emotional spike right above that resistance line we were looking at yesterday. And then lo and behold, it closes just under the line, but above the 9-period moving average. Now it's trading higher. It's at 13.26. I had said, I want to see 13.35s. Otherwise, I'm not really satisfied. And I want to see the silver, which was trading, if I remember correctly, at about 16.28 or something. I said, I want to see silver moving much higher. It's got to be up in the 16.80s to 17s. Then I'm going to be happy. What, it's at 16.35. It's down 6 cents. I don't see anything just yet. So we've taken a little bit of a position in gold, but in just gold itself. I'm prepared to get out of that. I'm doing it more as if the financials, which we'll look at in a minute, are really going to tank, then maybe gold will become a safety haven, just as bonds become a safety haven, and we'll get to that in a moment, when the market becomes extremely volatile. So we'll get to the questions in a moment. Let me finish up here. So gold is down, silver's down, but gold and silver are both up from yesterday's lows. we'll see what happens. Let's see what the HGX. Let's see what's happening here. This is copper, and copper right now is at 3.005. Gosh, look at that. I said yesterday, copper needs to hold. It just doesn't. The weekly chart is not looking that good. It's got a trend line that it's about to pierce and had pierced yesterday a little bit. Now it's taking it right out. Not a good sign. So let's look at wood, which is the iShares Timber and Forestry. Remember, I like to put the whole panoply together. And we've got the iShares. This is the wood is called the iShares Global Timber and Forestry ETF, trading down 75 cents at 78.22. Hasn't broken down, hasn't done anything. It's really almost at its highs. So let's watch it over the next week or so. But the high grade, but the HGX, which is the this is the most important Philadelphia housing sector index, is trading down 59 cents. It's just kind of stuck in this range. It's really not leading to the upside. Now we can go to the TLT. The TLT at this particular point is, it had a spike to the upside to a leg D at 120. It's at 120.23. It hit 120.82. I'm watching this very closely because of that H pattern in the monthly chart. The weekly chart is kind of okay. It's not great. And the TBT needed to make that leg D in the weekly chart, and it's way off the peak C of 39.86 at 37.24. I'm just going to be watching this, because if the market next week, instead of being oversold and starting a nice bounce to get back maybe 200 or 300 points of today's horrible down move so far, you've got to see money will flow from the risk in equities to the so-called safety of bonds, regardless of what weekly and monthly and daily or whatever the charts say. Money tends to do that, and we're going to be watching it closely. Crude oil had a great day yesterday. Today's down a little bit, down 61 cents in a leg D. Going to be watching this very closely, and I'll give you the parameters. If crude oil closes, not trades, but closes above 66.80, it's at 64.53 right now. In the next week, that's very good action. If it starts to fail and takes out 62.50 key support, that's not going to be a good sign shorter term. So that's that. And I missed out on the EUR USD. This is the euro dollar currency pair. Remember, I'm thinking these things are stuck in a range. Look at the dollar. The dollar is trading up a little bit, up 18 cents. It's just kind of stuck. It's not breaking down. It's not breaking out. Remember, rectangle formations can drive you nuts. They can last a lot longer than your patience or your money. What have I forgotten? I don't think I've forgotten anything yet. So I've got a couple of questions. Would I look at the IYT? Yes, the IYT is making that arch formation. It's down 1.94%. Same as some of the indices, actually a little bit more. I'm going to be watching this as well. It's got that H pattern in the weekly chart. Doesn't look very good. If it takes at 188.73, it needs to break into the 197s within the next 2 weeks, because if it takes at 181 support, it's at 188 right now. 180, let's say 183 support is going to hit a 181, the 200-period moving average. I'm kind of worried about the about that. A couple of questions came up. When I look at the EEM, you know, I did work. You remember last week I was showing you the international markets, making those H's and the lowercase h that goes to a lowercase m. The EEM, this is the, iShares. This is the iShares. Right, there it is. This is the, I keep missing something here. I'm sorry. So, yeah, there it is. So this is the emerging market. I just want you to draw that in correctly. The lowercase m can go to a lowercase h. And this is the larger H pattern that we're looking at in the weekly chart of the EEM, trading at 48.21, down 1.21, down minus 2.61%. That's even deeper than the others. If you look at the DAX, DDOW, look at this, same patterns. Arch, the lowercase arch or H goes to a lowercase m. This one's making lower lows and lower highs. Not good. DAX has got a peak F. Oh, I get very nervous when I look at these monthly charts. First time in years that I've started to say, I'm a little nervous about these monthly charts. If you look at Great Britain, GBDOW, remember, these are not the prices, but the exact chart formations. This is the Dow Jones UK Stock Index, made a peak F in the monthly, the peak E in the weekly, and this peak right here, it's unusual G at 248.55, 16th of January. 248 is trading at 317. That's 120 points down. Serious stuff, folks. I'll be back. Oh, that went quickly. I'll be back. I'll get you a lot of the questions. A lot of questions coming in. I've got questions as well. We'll cover them as soon as we get back. Important messages coming up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom OBrien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. The VIX index is up 2.62 at 20.48, up 14%. It was up much more. But I said to subscribers this morning, yesterday, in fact, 2-3 days ago, I said, I think the VIX is going to start moving up. We're not going to trade it. We've got other positions. But look what, and if it goes above, well, we were looking at the TVIX, which I feature every single day. TVIX, I said above, wasn't it 8.29? Let me just double check. I said above, there it is, 8.74, of course. 8.74, it starts legs C to the upside. But look at these moves. I love this situation that we're in right now. What's happening is the VIX hasn't had one of those extraordinary moves to the upside that goes into the, let me go back to the VIX if you don't mind, up into the 20s or higher on something that is really not, it isn't a major calamity. Certainly even being down, look, the way Trump's about to speak, I guess, and now the market's trying to get in position for some better news than they expected, or bad news, whatever it is. So we come back about 100 points from the lows. That's the way you expect it. But I love this action. If you are short, you don't really want to see the VIX right now. It's high at 20.29, but it's in range. It's below the 25s so far today. I don't want to see the VIX streaming up into the 30s right now. It means it's all over. That means I got to start thinking of covering the shorts. There's going to be a pretty darn good rally. At this way I'm looking at it right now, is that it's just a steady move up in the volatility index. More disbelievers than believers, in fact. Look at the weekly chart, holding above the 9-period exponential moving average, way above the 200-period moving average of 14.32. So far, I actually like the action, even if there's a wonderful bounce and the Dow closes down 150 points instead of being down 650 at the end of the day. I prefer this action. It's very subtle. It's very quiet. Let me see if I've got any indications. And if I should even use it, it's probably going to be usurped by someone. Yep, I've got an indication that says within 2 sessions, there should be a 9 to 11 point rally in the S&P futures, which should impact positively the cash index of the S&P and the Dow. So we're getting close to at least another bounce attempt. So let's see what happens there. So in the meantime, back at the ranch, let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
Yep, I'm good. Thank you.
Good. So question is, good old CODA phase. Is it,
Yes.
What would convince you that we potentially have already made the CODA phase?
You know, I was thinking about that over this past weekend. I'm saying to myself, wait a minute. The technique that I've used was fortunate enough to get us the exact hours of the low, the multi-generational low on March the 6th of 2009. Is it even possible that we could think that the QQQs, having got the exact day of the top short, and this is now the big one? And I went through so many charts. I've got, you know, if I look at now, which is one that has been of interest to subscribers, it is trading down 230 at 170.90. One of the great stocks of the most recent IPOs, and it's ServiceNow, cloud computing, Lightspeed, does all sorts of things. I'm looking at that. I'm looking at the monthly chart, and then I go to something like a CRM, which is also cloud. I have to move into the area that's the most of the period that we're in, the ones that have the most upside potential looking out. I'm not talking about just what they've done, but I'm looking for a 21st century type thing. So that's starting to pull back, just as I was expecting it would. And I went through so many stocks, but if I go through the XLK, and the XLK it's at 66.80, down 99 cents, gave a peak E daily top, it's a peak D weekly top. But no matter how I count it, it's only a C, and the technicals in the S&P Tech Spider Fund are still really good. I don't think this is the top. I think it's going to be a top, which we'll see what happens if we close under 24,200 tomorrow, Friday at 4 o'clock, based on my Roman candle and what we do. But I know it's a really important question, because if you're looking at, say, college funds, if you're looking at an IRA, if you're looking at retirement in the near future and all that, it's really important that you don't stay in positions, you overstay your positions on the long side. And all I can say is I'm thinking very deeply about it, but as yet, I don't see this as being the top. The news events, nothing about it has the characteristics that I'd be looking for. I see all the signs, but I don't. Not only that, there's the latest Geneva. I think it was in Geneva, the latest auto show. Was it? I think it was in Geneva. I must check it out. Had some of the designs that I'm starting to look at that'll be this final phase. They're only getting there. So I think the CODA phase, we're in, I think in the last third of this CODA phase. I don't know how long it's going to last, but I think it's got more to go. I am rather concerned.
Well, Basil, no, I appreciate that. Now, did you highlight a specific sector that you feel still is in C in a monthly that still has to make a D or an E? I missed that part.
The XLK, yes.
Oh, that still is only a peak C.
Leg C, not even a peak
Oh,
yet.
leg C.
Yes.
Oh, got it. Okay.
And that's that's tech. I mean, this is the 21st century. This is the core curriculum that we look at for what is moving, what is the generational thing right now, and it has to do with technology.
Right, got it. Awesome, Basil. Thank you very much. Keep up the great work.
Thank you very much. I always appreciate it, Ben. Good question. I'll be talking more about it. So, folks, whatever the news was, it seems to be taken a little bit positively here with the market. I like this. I don't want to see a minus 600, 800, and then a terrible Monday, and then yet another kind of a climax where we go up and then make another arch. I want to get this all done. I'd much rather have time and sideways action. All I can say is, within the context of the markets, this XLK making an all-time high at 71.34 on the 13th of March, 71.34. Let me put this in, 71.34, 313. With a silent doji, I was talking about that yesterday, the day before, it's high. I'm looking at the MACD and stochastic in the weekly chart, and yeah, they're starting to weaken, but the stochastic's still at 85%. There's still room to go down. There's still room to consolidate. I'm not seeing crash material. Now, I know that I had heard discussions in different news mediums over the last week or so. The top in 1987 started in August, right? I think it was about 22nd, maybe 22nd. I was doing my hand charting as well as just started with a Mac on the computer, doing the notation from the live exchanges. And I was looking at this and I'm saying to myself, okay, I've just discovered this new technique, and I've got my first big client that was Fidelity. I've got to get this right, so I've got some kind of a signal there. And I'm going back in those charts, and that was a 6 to 7 week period where you went from the high to the October 19th low. This is a different formation altogether. I'll be back to talk more about the markets as soon as we return, and I'll get to those questions.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, Trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, oops, I just see something here, a message for me. Kevin from Sacramento, the FDX. All right, we'll do that in a moment. I just wanted to show you Google. Remember I said I'm having a workshop on the peak Ds. Yes, you can go to an E, you can even go to an F, but D is one of those letters that at the 4th highest peak, if you hear anybody talk about a peak A or B or C or D, they're using the Chapman wave methodology. So this goes to a peak D at 1177.45 in Google. This is not the A shares, it's Google itself. Alphabet C shares. And then it has a Chapman wave 2-bar reversal at 1176.76, 70 cents less. And it reverses at that peak D after a doji candle. Whew, what more could you have? And now it's pulling back. And I think that we're in the sideways, but in the first stage of a consolidation in these major stocks like Google, like an Amazon. And not to say they can't have decent bounces. There's Amazon, peak D, all-time high at 17.54 on the 13th. I was asked a question by Bonnie. Can you discuss the dreaded H and how it can recover the 3-bar possibility? Thanks, Bonnie. So, Bonnie, there are a couple of things. First of all, no. Yeah, I'm just joking. Yeah, I can discuss it, but it's going to be part of my webinar. So you could really get the nitty-gritties. But my CD introducing the Chapman wave methodology has a whole chapter on the dreaded H. And it discusses what you're looking for and why you're looking for it. He has a little H, this little mini H right here in Amazon. I'll do a little bit tomorrow in my... tomorrow usually is Technical Friday, so I'll try to do it. Just remind me again if you don't mind. But just suffice to say that within 3 bars, if it breaks to a new high, there's a chance that you recycled higher, and you can use alternate letter counts. And that's where you have the possibility of getting a brand new buy signal. So I'll talk about it tomorrow. Next question is FDX. So FDX trading right now. So FDX, I looked at this over the weekend. I thought, you know, Federal Express, with Amazon doing what it's doing, who's doing all the shipping? I want UPS, Federal Express. Do they have private people? What is exactly going on here? Because Federal Express, to my way of thinking, with people buying like a toothbrush and having it free shipping, I mean, Federal Express must be moving a lot of stuff. So, and UPS, and if Federal Express had made a high in January of 274.66, and it's trading now to, what did I say, 270 something, 274. So now it's trading 40 points lower, 37 points lower. Something's happening, and I would not be surprised if it's part of the economy. And what I wanted to mention just one more time today, I want to try to mention it every day in a different aspect, is that CTS, Cintas, is down sharp, is down 5 at 168, made a high of 178.28. This is my clue stock. We actually don't have a position. I forgot all about it. I should have had this as a short because that was, I said, and I think we're having a slowdown in some of the areas. That's the issue. That's why we're going down, not because of tariffs and all that stuff. So that's the question. Next question I had was, so FDX, let me go back, FDX, because that's part of the IYT, the Transportation Index. If my eye says that Federal Express is making a peak B, which could become a minus B, a B minus, that's the Chapman wave failure and the H pattern right there. And it says that 235 will be near-term support. It's at 239s. If it breaks 235, it's going to be a real quick trip to 230, 228, the 200 period EMA and SMA. So the daily chart, that is. The way I'm looking at it now, it could just be in a trading band, and that maybe is what's going on. So if you're long Federal Express, I would be out of it right now. As we're speaking, I say, it could pop. If you're making money, get out. If you're underwater, I don't know if you want to wait a day or two just to get another 3 or 4 points to the upside. I would get rid of part of my position right now based on the daily, the weekly, and the monthly charts. It made a peak E top after a very quick D, a doji high. Way back, this was in January, and look what happened. It plummets to the 200 period moving average exactly on the 9th of February. Has a bit of a rally, stalls in the 250s. Now it's at 239. I think that it's making the H to a lowercase m pattern. Be careful. That's all I can say. If it's an intermediate term position, then you definitely have to be careful. You don't have to get out of everything, but at least take something off to show that. That's if you're in a losing position. If you're in a winning position, if you want to put 238 as a stop, fine. And my thinking is it's going to go lower. Next question is XLF. I do want to get to the XLF because this XLF is not acting very well. It is down 1.82%, down 52 at 28.20. I spoke about this the other day. I said that the arch formation has me somewhat worried. I said Goldman Sachs has me somewhat worried. It is on my list as a buy for the next big phase. I don't see that phase coming in right yet. So going to the Goldman Sachs, let's see if it's the same thing. Goldman Sachs, whoa, down almost 4 points at 258, made a peak D, another peak D. There we are, right there on the, was that the 13th? On the 12th of March at 275.03. The all-time high was right there in the monthly, in the weekly chart, probably a G/B. I think it's going to be a G in the end. I'm not sure, at 275.31. It's down 18-ish points. I don't like this. It's making me a little unhappy. I like the weekly chart. Here's another reason, Ben, why I'm looking at the longer term with higher highs to come. Goldman Sachs, I think, will be one of the leaders in the next big move. But right now, Kevin, not on the line, he called in and left the message, so Al gave it to me. Sacramento, from Sacramento, FDX, Federal Express, trading at 258, down 378. This is still pretty darn good in the monthly chart. The weekly chart is in a choppy range. So Goldman Sachs is on my list as a potential buy for subscribers, not yet. So that's what I'm looking at. So that was the XLF question. There was another question, I thought, Boeing. Hey, what's happened to Boeing? I'm going to cry. Yep, there it is, the 326. It's making the H pattern yet again. This is the second H pattern. Remember, I discussed this in great detail. We were short for subscribers at 353.01. It dropped to 337. So I didn't get out. We got out with a break-even zero trade. And I just missed getting back short. Now we're out of it. I'm not interested. So here we are looking at the, right there. So now it hit that resistance line at 335. No, I'm sorry, 341.91 on the 21st yesterday. Got repelled and it's down. So Boeing is actually acting fairly well, but I think it's got a sell mode in the weekly, a daily, a sell mode in the weekly, and I'm really worried about this leg E, probably a peak F in March, probably a peak E in the Boeing monthly chart. So yes, this is the same sort of thing. Now, a whole bunch of people have sent me some questions saying, if there was a timing gauge, would you be thinking next week you could go from the let me just do this right now, because it's a current question. Would I go from the internal low? Are we about to make a residual low? Remember, earthquake and aftershock. I'm going to discuss that just briefly when we get back. Tomorrow I'll spend a lot more time in this particular area because I do think it's more a sideways so-called consolidation, and that says sector by sector, and bringing them down. I'll be back straight off this message.
You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So just quickly, I was asked about XLE. The XLE, yes. XLE is trading. Just remember, this is the one. This is the energy sector. It's kind of trading sideways. If I look at XOM, let me just see if that's going to be a clue. Yeah, these guys are all, remember, rectangle formations can last a lot longer than your patience. Let's deal a little bit more with the energy sector tomorrow. There's some things that I noticed the other day. I just don't have time to do it right now. I was asked about the TNX. Let's go to the TNX as a separate vehicle right now. So the big question is this a peak, like a peak C1, C2 type thing? Is this a failure pattern? Well, this is the 10-year, and it did a peak E at 29.43 on the 21st of Feb. Now it's basically, I would call this more a sideways trading pattern. However, my rule of thumb is that if you go in this drop bucket, Chapman wave drop bucket formation, double top formation, and then you fail 1/3 to a half, there's a real good chance you're going to test the bottom. Well, the bottom was 27.95, and today's low is 27.99. Whoa, that's close, right? Make it real clear for me. A close in the 10-year T-note yield, the TNX, under 27 in the weekly chart on a weekly basis, under 27, I'm going to give it a little room. Let's call it 27.60, right? It's at 28.37 right now. A weekly close would say to me that the market is going to be vulnerable for a longer period because money is flowing from the insecurity of equities into the so-called security of bonds. All right? Just make it real simple. And yes, in the TYX, we are missing in the TBT and the TYX, we're missing that peak C. It can take a long time. It can take weeks to go to that D. I think we will be going to higher highs in the yields, but in the meantime, the market is more the predictor for me of where yields are going to go. And right now, I think I heard Tom talking about it earlier, and I agree with him. I think money is going to flow. As long as the market is insecure, money will flow into the bonds to get those yields at least a little bit low. So with that said, you've got Steve Rhodes coming up. You've got Dave White. You've got Tom O'Brien. You've got Andy Heck. I'll be back with Tom a little later today. Don't forget, go to the front page of TFNN. Check out my free webinar for subscribers. You can subscribe. It's a money-back guarantee. It's the perfect time for doing it. Hope you can do that. Thanks for being here. See you later. I'll see you tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.